Hey, my name is James Nicholson. I hope you guys are well. It's not great news. Interest rates, the outlook for interest rates has shot up over the weekend. I've actually been away in Somerset, not checking the news so much. Came back, had a look, and it really isn't looking good. And here's why. We have a problem with wages and more importantly, something called a wage price spiral in the UK. So we're going to go into that, what that means for investors, what that means for interest rates, house prices, and everything in this video. So before we jump into that, make sure if you haven't done already, subscribe to the channel and hit the bell notification. And we're on target for 100,000 views this month, but we need your help. Make sure you help us get there by smashing that like button. That really helps us with the YouTube algorithm. It gets us more views on the channel and really makes a big difference. So thanks to everyone that does that. So what is going on? I went away on Friday and everything was looking great. Mortgage rates were coming down. Banks were fighting over our business. And then one weekend and everything changes. And this is the problem in today's market. You see, what we need as investors is some certainty. And that's why you're not getting people selling their houses, you're not getting people buying the houses. That's why transaction volume is down massively, because people don't know where we're going to end up. And until we get a little bit more certainty, which it looked like on Friday we were closer to having, people won't take action. They'll sit on the sidelines and they'll wait to see what happens. So what's been going on this weekend? Well, data's starting to come out. We've got inflation data tomorrow, and we're hoping that the inflation data is good. We really need a good one this week, guys, because if not, interest rates are going to get hammered yet again. So what is going on? Well, wages are the problem at the moment. And so this annoys me as well, actually, because people should be getting pay rises if the cost of goods has gone up. But it is a problem because it could prolong inflation. So wages have gone up by 7.8% on an annual basis, which is the highest ever. That's the highest ever on record that wages have gone up in the UK in a year. And that's what people are worried about. If that continues, then we will start to see even more interest rate rises. Now, Friday, the outlook for interest rates was that the Bank of England rate would peak at 5.75%. That's changed this weekend, and now it's looking like the base rate, the Bank of England base rate, will peak at 6%. And for a buy-to-let investor like myself, that makes a big difference because we pay interest only. And that might not seem like a huge jump, but that is a big jump in monthly payments that people will see. That ultimately is going to get passed on to rent. We've got landlords leaving in record numbers at the moment because they own property in their personal name rather than in a limited company, so the tax burden's too high. That is going to be a problem for everyone. So if you rent a property, you don't want your landlord's interest rate going up, trust me, because either they'll sell the property and then you'll have to find somewhere else. And when you find somewhere else, the rents are significantly higher now. Or you'll just get in a situation where your rent will go up where you are, which is not what you want either. And so this is a really difficult situation. So we've got inflation at 7.9 at the moment, right? And so we've got the announcement tomorrow. Now, the outlook, what people are hoping for is that we're going to drop to 6.8%. So anything higher than that is very bad news, especially for interest rates. And that happened, right? So in the last few inflation data reports that we had one where it went up, one where it was meant to go down, where it stayed exactly the same, and then the last one where it did drop more than was expected. So if we can get more than expected, I mean, if we can get to 6.2 or something like that, it's still way too high. Way too high. But it's still better. And so that's really what all we can hope for before we get tomorrow's data. So what else is going on? Well, unemployment is actually going up. So it was 4%, and now it's 4.2%. And that's not good, right? We don't want people losing their jobs. There are still loads of jobs out there, but people need to be reskilling. And so there's tons of jobs that people need to fill, but not the right skill sets in there. And that does get impacted by things like Brexit, not to be too political about it, but it does, right? We have less people coming into the country now that would do certain jobs. And so that's just the way it is. And so this is an ever-moving market at the moment. And it's constantly seen in the comments by you guys. You'll say, one day I'm saying this, the next day I'm saying that. Yes, that's it. Well, that basically I agree. I don't disagree with you. One day I'll be saying house prices are going up, the next they're going down, because we've got so many different data sources. And that's why it's important just to know what's going on in the market right now. It is changing day by day. House prices are going up in one area. They're going down in another area. Interest rate predictions are really changing. And so it's important to stay informed and know what's going on, because some of you will be coming off of fixed deals. Some of you will be investors and thinking, what should I do? Should I sell my portfolio? Should I refinance it? And that's important that you just keep getting the latest news on what's going on. So what we probably are going to see is some of the banks. I feel that some of the banks that cut their rates on their mortgage products last week may end up putting them back up this week. And that's how quick the market is changing. And it's really hard to see what's going to happen in the next week at the moment. And so what we really want, get this inflation down, stop talking about inflation, get back to a level playing market, get some certainty. Even if that means house prices have gone down 20%, then at least we know that's where we are right now. Now we know what the rates are going to be slightly longer term. We just want a bit more predictability in the market. So there are deals to be had at the moment. I've got some good deals in from a sourcer this week that I'm looking at today. There are some real opportunities out there, people that just want to get out of the market. So it is a good time to buy. And the reason why it can be a good time to buy is because if you buy, you put it in a limited company. So that means that you're going to not have the tax burden of Section 24. That's very, very important. And you know what the rates are today. So even if you feel interest rates are going to go down, you could fix that deal for 5 years. Rents are going up, which means that you'll make slightly more profit there. There are some good deals to have. There are some people that just want to get out the market, and they don't mind taking a loss on their property because they just want to get rid of that burden and maybe cement some profits that they've made. Maybe they haven't got a mortgage or something like that. So I think it's a good time to be looking at opportunities cautiously, just making sure the deals stack up, and that could be a good opportunity as well. So what do you guys think about this? What do you guys think about this? Friday, we're talking about rates going down. Tuesday, I'm now talking about rates going back up. Where do you think we're ultimately going to end up? I've loved your thoughts and opinions and comments. Keep it nice and polite in the comments. Do smash the like button, guys. Do subscribe and hit the bell. Check out all the other content. Let's get to 100,000 views. Help us by watching this video right here.